reduced, gold's price has remained within last week's opening and closing range. Following gold's continued ascent last week, slight fears funneled inflows into the pressures, and it now appears that the shiny metal is moving in a sideways motion as the market awaits further information. In this report, we aim to shed light on the catalyst driving the precious metals price and assess the future outlook. The wide uncertainty that had existed during the past few weeks appears to have vanished, yet the pressures held its ground between last week's opening and closing range, remaining relatively unchanged. Last Wednesday, the US JOLTS job openings for February dropped under 10 million for the first time since the 7th of July 2021. The unexpected drop highlighted that the US labor market may be losing steam and as a result weakened the greenback, as speculation of a recession increased. Thus, given that the shiny metal is perceived to be hedged against economic downturn, traders saw safe haven inflows into the pressures following the announcement. Furthermore, right on the heels of the JOLTS job openings report, the ADP non-farm payrolls figure was released, which supported the JOLTS figure, indicated that the loosening of the tightness of the US employment market. That resulted in gold further capitalizing against a weaker greenback and allowed the metal's price to break above the 2000 psychological level and move towards its all-time highs. On Friday, however, the narrative shifted as the non-farm payrolls report recorded once again solid results. Even though the headline figure came below estimates by only 3K in the grander scheme of things, the addition of 236K during the month of March signals that the US labor force remains tight. More importantly, the unemployment rate eased to 3.5%, just shy of the lowest levels ever recorded, and serves as another indication that the employment market remains hot. As a result, despite the pressures gaining support to the ADP non-farm payrolls and JOLTS job openings figures, the gains made by the ADP NFP figure were wide within the next two trading sessions as the greenback gained support, leading to outflows from the precious metal. Given the continued tight labor market, the Fed may have some leeway in the event that decided further rate hikes are necessary in order to continue their fight against inflation. Thus, with the possibility of future rate hikes bang on the table, given the resilient results from the NFP report, the market now foresees that the central bank will hike by 25 basis points in the next meeting on the 3rd of May, evident from the 71.4% probability from Fed's fund futures. Furthermore, NY Fed President Williams, who on Monday dismissed the nation that the Fed's interest rate policy was behind the collapse of SVB, stating that he personally doesn't think it was the case that the pace of rate increases was rallying behind the issues at the two banks back in March. Hence, the relatively hawkish comments facilitated traders to speculate that rate hikes are still on the agenda. It should be noted that despite the hawkish remarks made by NY Fed President Williams, the comments did not result in major fluctuations in the price of gold, which could be due to the release of the March survey of consumer expectations by the NY Fed, where respondents were more pessimistic about future credit availability as well, with the share of households expecting it will be harder to obtain credit a year from now also rising, potentially fueling continued fears of a recession in the near future, thus offsetting the hawkish remarks. The highlight of the week, however, is the widely anticipated US CPI print on Wednesday that should provide valuable insight for traders as to the degree to which inflationary pressures still persistent in the US economy. Should there be a declaration of inflationary pressures, we may see the precious metal strengthen, whereas a higher than anticipated print could weaken gold's price since it may signal that inflationary pressures remain persistent in the US economy. Hence, we may see the pressures remain relatively stable as gold market traders await for the results of the report. Thank you for watching.